All right, welcome back to another video. Today we are going to be checking out Ulta Beauty, beautiful. Going into the 5-year chart here, you can see we have recent highs about $551. It is at about $423 right now. COVID lows was around 148, and then before COVID it was trading right around $299, $300 or so. So Ulta has been a pretty dang good performer over the last 5 years. It's up about 70.90%. I wonder if that beats the index. Let's see. Let's go to S&P 500, compare 5 years, and it's close. It's close. It's getting back down to the S&P 500 level. S&P 500 is at about 56% increase. Ulta is at 69% increase. 69. So it's a buy. All right. So let's go over to the their latest earnings, and I just kind of wanted to do a brief glance on their earnings. And like a lot of other retailers, shrink is a major concern. Theft is a major concern. Their earnings look pretty dang good though. I mean, you have comparable sales increased at 9.3%, but their guidance did show a little bit of contraction in their net sales. So they didn't necessarily like downgrade. Well, I guess they did because they lowered operating margin. So they didn't necessarily downgrade a ton, but they tightened. Actually, no, they upgraded their top line. What am I thinking? Jeez. They upgraded their top line to 11 to 11.1. Prior was 10.9 to 11.05. But they downgraded their operating margin guidance from 14.7 to 15 to 14.5 to 14.8. So they downgraded that operating margin guidance a little bit. And I believe that is kind of the concern for a lot of retailers right now. And the concern that the market has for a lot of retailers right now is basically that weakening consumer and the shrink that they're seeing. You know, we've talked about it with Target and Dollar General, Ulta, basically any retailer you look into. So let's go ahead and get into the financials, go over to the template. We're going to go to, let's just check out some metrics here. So bottom line growth over the last 5 years has averaged about 13.44%. We can see that the EBIT growth has been about 13.85% 5-year average, net growth 13.54, free cash flow growth. Free cash flow growth about 12.94. We've seen really good growth from 2013 on to 2023. They have been repurchasing shares that we can see here, and they continue to repurchase shares in this last quarter. See that in their release, 541,000 shares, cost of $285.8 million. So pretty good stuff there. And let's look at these yields. So over the years, it looks like they've kind of traded between right around that 4 area, maybe. That might kind of normalize at that 4% area. So historically speaking, we're actually seeing their multiples at pretty attractive level compared to what we have seen previously. So that's pretty interesting. Let's go over to the income statement. We can just see that growth over the last 10 years. And we also see associated growth with their SG&A and their expensive. Shares outstanding decreasing from those buybacks, which is beautiful. EPS increasing just beautifully as well. That's why it's Ulta Beauty. It's Ulta Beautifully investment. We go to their cash and short-term investments. They're sitting on about $636 million right now. Long-term debt is not really that bad at all, interestingly. So they got some lease obligations, and long-term debt is right around $1.6 billion, it looks like, if this is correct. And let's go ahead over to the free cash flow statement. When we get to the free cash flow statement, all right, we got really good operating cash flow growth. I mean, this stuff looks good. Man, this looks good. This looks nice. CapEx, pretty high. Investment in property, plant, equipment. So they are probably growing, opening new stores. We see common stock repurchased. They don't pay a dividend, but man, they are returning that capital to shareholders in stock repurchases. This is looking really interesting. So ratios and metrics, let's go over there, see what their margins are like. And we can see margins have slowly expanded. They're up to about 40%. Let's see, operating profit margin is also expanding, 16%, 13.17%. So slow expansion of margins over the last 10 years, which is looking pretty good. We see that per share metric growth over the last 10 years. Let's go over here and we can see, yeah, beautiful. Return on equity, 17%. Return on capital employed, 11%. Return on assets, 6.46%. Man. Oh, this is interesting. All right, so we got per share metric growth, and we can see, it's been a very, very solid grower. Here we go, buybacks. I've seen that before. Go over the growth percentages. Let's see what type of EPS growth they've had. Revenue growth and gross profit growth about 20%, 40% decline, or 40% in 2022, 2021 we saw a decline. Previously, they've been growing at a pretty nice 20% pace or so. Declined a little bit going into 2019 and 2020. Then it increased nicely in 2022 and 2023. So it seems like they've been very good capital allocators over the last decade. So if we look at their buybacks over the last couple of years, we can see it's been about 2.9% average, 2.45, 5.6, 3, 2.6, 3.45. So maybe we give them like an extra 1% negative. So best case scenario is about 3.98. We're going to say the scenario spread is a little bit tighter than that, maybe 10%. What? Oh no, not 10%, negative 10%. There we go. And that's about 2.61 to 3.98. Bottom line growth, we're going to leave that. We're going to let's do a scenario change of about 10% from high to low. EBIT yield spread, we're going to leave all of that. And for their average yield spread, we remember that they trade historically probably between right around that 4% area. So maybe we can do a little bit of drop off here. So I changed that around a little bit, and we basically got a average yield spread on the valuation from about 3.97 in the best case, the very bullish case, to about 6.91%. I wanted to get that right around 7%. Multiple or yield multiple in the very bearish scenario. So we've got growth. What we're going to do, we're going to take that down a little bit more, maybe 12.5 in this scenario. So we have bottom line growth in the best case scenario of 13.44. In the very bearish scenario, we have 7.88. We could probably even increase that a little bit more. Let's do negative 15. So yeah, 13.44 to 7. So they are growing revenue at about a 8.73% clip. Looks like they got a decent amount of bottom line growth from the margin expansion on the bottom line. But we don't know. I don't really want to count that going forward, that the margin expansion is going to continue. So got a growth rate of 7% to 13%. And that kind of gives us a fair value range, probably really between like 374 to 480. So we're pretty much in that area right now. And with those scenarios, we have a very bearish buy price of 298, a bearish buy price of 369, a base case of 461, a bullish of 583, a very bullish of 748, and our 5-year targets in the very bearish scenario is 600, and the bearish scenario is 743. In the base case, we have a 5-year target of 928. Bullish case is 1174. Very bullish case is 1504. This is all assuming a base CAGR of 12.5% with a 2.5% margin of safety. If we want to bump that up a little bit, say we wanted to get 17.5%, the very bearish buy point would be about 262. Bearish would be 324. Base would be 406. Bullish would be 513. Very bullish would be 657. So this is interesting. This is an interesting one. It is a type of retailer that I would like exposure to. The other one that I would potentially want direct exposure in is Sephora, but then I'd have to own, I believe, LVMH, and I wouldn't be able to just have concentrated exposure just to Sephora. So kind of Ulta is the other player that I would want for that type of exposure. So yeah, this one is looking interesting, and it's getting to interesting levels. It really depends on the base KR that you want, but I think yeah, it's getting interesting, especially in that like low 400 area. Let's see what it's at right now. So I think it's 423. Let's see, got that nice drop. Yeah, 23.18% pullback. So I mean, if it got to 350, that'd be great. I don't know if it's going to get down there though. We'll see how long this negative momentum can continue. This might be a strong candidate for me to put on my shopping list for retail exposure. So, all right, well, I hope you guys enjoyed this one, and we'll catch you later.